Good evening. The Tuesday's phenomena continued to create a magic for the fifth week in a row, with the main Indian stock indices ending near the day's high. Just when one thought that the Indian markets could crack further after tumbling on Monday, comes another spectacular Tuesday rally. After opening on a positive note, the equity benchmarks accelerated in the afternoon, especially towards the close of trade. The BSE Sensex was up by 330 points to close at 17,194 and the NSE Nifty was up by 112 points to close at 5,199. Today's powerful bounce back was led by the banking sector, with the BSE Banking Index up by almost 4%. The BSE Realty Index was up by 3.5%. The BSE Auto and Metal indices were up by more than 2%. Tech and oil and gas and IT indices gained between 1.5 to 2%. Power, pharma, PSU, FMCG and consumer durable indices were up by 1% or more. The capital good index was up by less than 1%. The BSE mid-cap index rose by approximately 2%, while the BSE small-cap index was up by 1.4%. The market breadth was strong today. On the BSE, 1,805 stocks advanced as against 1,003 declining stocks and 108 stocks remained unchanged. The India VIX on the NSE fell by approximately 3.4% to close at 22.66. Globally, the sentiment improved a bit due to reports that the most European Union leaders have agreed to strengthen a financial firewall against the debt crisis. Optimism is also growing over the ability of the Greek to seal the deal with its private bondholders on the proposed debt restructuring to avoid a default. The US is in better shape, but Q4 GDP growth was tad disappointing. All eyes will be on Friday's monthly jobs data. Before that, we will get statistics on manufacturing PMI and services PMI across the globe. The trajectory of China's economy is also being tracked closely to see if it manages to engineer a soft landing. On the domestic sector, the news is not so good, with the core sector growth for December decelerating from November. Results from some of the Indian companies have not been that encouraging. There have been few pleasant surprises as well, but the overall India income is still hurting from the RBI's aggressive rate hikes, rupee's weakness, policy inaction and global economic slowdown. FI flows have been robust but may taper off in the absence of clarity on the policy front. Outcome of state elections and the run-up to the union budget are going to be crucial. Watch out for IIP numbers for December following a deceleration in core sector growth. Inflation data will also be very important in view of the RBI's monetary stance. Thank you. Wish you have a great evening ahead.